Hello traders and welcome to the NFP non-farm payrolls live webinar. Today is September 7th of September. It is almost 12 p.m. GMT. Before we get started, we will take a 1 minute or 2 minutes pause just to wait for more people to join so we can start properly. But in the meantime, I'd like to ask you for a favor, just for us to confirm that you guys can um, see my screen there, and also if you can hear me properly. I would very much appreciate if you would just type in the question box there. Yes, all good. Thank you. Okay. Thank you, Colin. Thank you, Robert. Thank you, Musti. All right, so seems to me like we're all good to go. Okay, now we'll pause my mic here and we'll return in just 1 minute and then we'll kick it off. Thank you. Hello traders and welcome to another non-farm payrolls live webinar brought to you by orbex.com. My name is Richard and I will be your host for this session. Now this webinar will be based mostly on technical analysis, more exactly on Elliott wave analysis, which is my specialty. So I will be combining multiple technical analysis tools such as structures and patterns, channels, Fibonacci lines, divergences, and many other tools, technical analysis tools basically. Before we do that, I'd like to just inform you basically that this webinar and the analysis and everything that I'm about to say actually is not designed to influence or induce you in any way, and should be treated as simple market commentary. This is not an investment advice. Now that we got that out of the way, I will just explain to you basically what this webinar will be all about. The NFP non-farm payrolls is an event. It's an economic indicator, and during this event is basically some structures are aligning most of the times, which is the case right now. I do see multiple things. So what we're going to do is basically before, during, and after the release, we will analyze the charts live, and I will be doing live Elliott wave analysis. for you guys, and together basically we'll arrive at a point where we could most likely have a proper idea on where the market could be going. I will be answering questions, of course, so for those of you who are joining this session via the webinar link, who are actually inside, you guys can always use the question box anytime. I will do my best to answer fast. For you guys for those who are on Facebook Live, for you to have interaction with me, you'll need to join the session live. So basically, after the NFP release, I'm also going to cover something very, very important, which by the way, there are some handouts out there, basically some downloadable PDFs, which includes 3 parts. The first 3 parts, in total there are 4 parts of the Elliott Wave ebook, which Orbex has prepared for you guys, obviously with me as the author of the ebooks. It's a learning material, basically. So, in other words, it's for educational purpose, which explains the Elliott wave theory. As I said, the author is myself. I'm covering a lot of things there, such as structures, patterns, everything. So, in other words, it is quite interesting. I would invite you to take a look. You can download it for free if you're in the session. Now, another thing which I'm going to cover right after we go through the analysis with the live analysis and everything is the trade war report, which was recently produced and given out to our live account holders. So in a nutshell, basically, this is how the Elliott Wave ebook looks. The 4th part will be available only for live account holders, and it's, in my personal opinion, the most important one because it covers the corrective structures, multiple structures, more than 23 different types of corrective structures. Now, part 3, which is the one you have in front of you, is covers the motive waves, ending diagonal, leading diagonal, etc., right, and the impulse and the extensions and all that. So it kind of looks like this. As you can see, it explains exactly how these structures are performing. But the trade war report is quite exclusive, I would say, because this is where, from my side, from my technical analysis side, it's basically, let me just 1 second. Okay, sorry about that. Just close the messages there, receiving a lot of private messages there, so I just don't want to get distracted. Okay, now this is where on the trade report I was actually inclining for a rise in the euro, even though some would have thought that this is actually a breakout of the pivot 1.15. I said that there is a slight possibility, realistic possibility for this to rise, and I'm gonna cover exclusively after the NFP release. I'm gonna make an update on this on multiple charts, I would say, but also talk about the market. And what you have in front of you here is a full cycle on the Dow Jones from 1914. Yeah, so more than 100 years um, of a bull market, and something interesting will happen right here, and I'm going to explain to you exactly what I'm seeing in regards to the volatility. So let's go back to charts, right? And I'm going to kick it off really quickly. Now, if you do have any questions, feel free to write in the question box. Now, just for me to inform you, the first part, of course, of this webinar will be free and streamed live on Facebook. After that, it will be we will stick only with the ones who are actually inside the webinar. Obviously, attendance is free. However, you'll need to join the session via the link provided on Facebook Live as well. So yeah, now let me just have a quick look right here, and we'll kick it off really fast. So just hang on with me. All right, so firstly, what I'm going to do is I'm going to start off with a bigger picture right here. And for me to do that, I'm just going to put put basically the dollar index chart on the daily chart, right? So what I have here in front of me is an ABC structure, a declining ABC structure with the A as a leading diagonal and the B wave during the period where Federal Reserve, FOMC, and Chair Lady Janet Yellen, they decided to basically look into the hiking the rates, right, which actually occurred. So 1 year of downtrend right here, corrective in this minor red 4 of the intermediate C turquoise, and the downtrend actually stopped right there. And I was actually active right here. I was active here as well, as you can actually see, and on the top, and on the Federal Reserve 12th of December on the actual fall. Pretty much I've been active right there. After that, the dollar index started correcting on the upside. And how I'm looking at this corrective structure on the daily chart is in an ABC intermediate, which is basically intermediate A and B, where B could is showing a corrective structure which has two ways of developing, and this is what bothers me. I mean, not really bothering me, but a breakout would be, in my personal opinion, fatal right here for the US dollar, because this could push the US dollar index all the way down towards 92 or even 91 levels, where some Fibonacci levels actually align, right? So if you do have any questions in the meantime, just write them in the chat box, okay? Just for me to remind you. So the NFP release, the jobs report, it's very these economic indicators are quite important, and having more jobs, I mean, a better reading for the jobs would mean that the economy, the U.S. economy, would is doing well, right? And when people actually have jobs, this means they have money to spend, and they contribute to the economy, and this is how the GDP, the gross domestic product, actually gets increased, and everybody's happy. Economy is doing well. Unemployment rate is decreasing, and people spend more, they have more, they gain more, etc. So everybody is contributing to the economy. It's all nice and peachy. But after the second part of this webinar, which I'm going to stick obviously with the ones actually attending this webinar, I will be talking more about the possible market contraction which I'm seeing, and a possibility for a VIX spike. And last time the VIX spiked, the VIX is basically the volatility index, and I'm explaining this in some of my articles there on the Orbex blog. And what I'm seeing in February, the last time it spiked, we all remember it, Dow Jones losing 3,500 points. And to be honest with you, I kind of saw it coming. I have a video on that speaking about the possible, drop, and relating towards the ending diagonal forming back in January, when everybody was still complacent and greedy and still buying stocks and all that. I was talking about a possible fear period being around the corner because of the wave structures and how that led me to think. So on the second part of this webinar, I will be expanding more in regards to this possibility for another spike in volatility. And I will be, of course, speaking more about the Dow Jones. By the way, this is Dow Jones on the 4-hour chart, and what I'm seeing is a possible ending diagonal forming. We'll expand more. I will go on each and every chart, starting with Euro, basically the FX majors. I am keeping an eye right now on some exotics such as Mexican dollar and Turkish lira as well. There are many things that I'm keeping my eye on, but also metals, indices, crude oil. Yeah, we'll go on each and every one of them. So let's take a look at the fundamentals first, and let's see the expectations for this release. The non-farm payrolls, as I explained before, um, basically the analysts, let's say the forecast right here is for an increase, more jobs to be added, which would be favorable for the US dollar. The average hourly earnings, however, are expected to decrease while the unemployment rate decreases as well. So this kind of contradicts one another in a sense that if the unemployment rate is lower, that would be bullish for the US dollar. If more jobs are added, that would be bullish again. But if the average hourly earnings are lower, then this could actually mean business, because honestly, I'm more curious to see the average hourly earnings release, the figures, than I am for the non-farm payrolls, to be honest, right? Because this kind of weighs more in this period, especially while an FOMC, I mean the Federal Reserve rate hike is priced in for September. Yeah, so we'll see on September 24th what will actually happen right there. Um, there is a contradiction. There are many things happening in the markets when it comes to the fundamental side and the trade war report. President President Trump is a major fact with all this, and this could, in my personal opinion, this could actually lead towards a chain reaction globally. Because I know what I'm seeing. Technically speaking, some things are kind of lining up for something bigger, and it's a bit scary, technically speaking, what I'm seeing. Yeah. For instance, I will give you just a quick example right here. If I go on the Nasdaq right here, I mean, all the US indices, for me personally speaking, they kind of show reversal patterns. I mean, patterns ending, possibly completing, right? Now, I could be right, but I could be wrong. But what if I am right? Take a look at this rising channel right here, what it's doing. Very curious to see what the decision right here. As you can see, and I'm going to explain to you guys exactly what I'm seeing on each and every chart. Okay, starting with the indices, basically with the FX. First we're going to cover the forex pairs, then we're going to move on to the metals, and then with the indices. Okay, so without further ado, let's just jump on the higher time frame chart. So as I said, the dollar index right here on the daily chart. I'm curious to see if this is either a running flat, which would obviously end here, and the dollar to start this C leg, very aggressive buy. And honestly, this could actually happen. However, I would be comfortable with an expanded flat on this, and I will actually explain why when I'm going to move on the euro chart to explain to you why I'm seeing that. Okay, because honestly, let's say for instance, if the VIX would spike, if the VIX, the volatility in the index, will bring the volatility with it, and the bears would return for the US indices. What I've noticed is that typically the metals and the euro and pound, they get weak, while the dollar actually either stays put on gains strength. Okay, and the yen gains strength with that as well, being the safe haven. So safe haven as one of them. Now, it would make sense if the VIX would spike and the US indices to drop, yeah, for the dollar to actually start this rise. However, is the rise in play? Right, that's the main question. Where's the dollar? Where's the US dollar going? Is it going up? Is it going down? Well, I can only get close to the truth. The Elliott wave analysis does, at one point, it does allow an analyst or a trader to be one step ahead, yeah, of the crowd, because um, it decreases emotions. First of all, technically speaking, when a pattern is ending, the by using Elliott wave analysis, most of the times I am catching the turn. I know when the market is ready for a possible pattern. That's the difference between leading and lagging analysis. Elliott wave analysis is leading analysis. Those indicators, RSI, etc., stochastics, MACD, those are lagging indicators. Personally speaking, I stopped using them because they don't really show what's going to happen. They just show what is happening right there and then. And without a leading analysis tools such as Divergences, can't really use them much. But there are ways to use the overbought, oversold, etc. Right? Moving average, convergence, divergence. There are ways, but let me just stick with it here now. I am inclining. Yeah, I'm not gonna say it could go up, it could go down, but I am inclining basically for this 50%, and obviously we have some vibration zone right here. Okay, this was an important level for the downside, and this was actually mentioned with my latest video analysis, basically with this video on the Orbex blog, when I was mentioning the dollar index to possibly start a drop, while also mentioning the euro basically to possibly start rising. And I'm going to expand on this fractal pattern right here. By the way, the fractals are explained in the course, but yeah, I was inclining for a rise right here, and I'm actually explaining during this video why I'm seeing that, and I'm going to explain to you exactly how I saw that later on. But until then, we have only 9 minutes until the release. Okay, so there's not much time. Just going quickly right here, the point is on the dollar, it's about to make a crucial decision in my personal view, and I explained why. Because a breach could be fatal, while a rise could gain support towards higher grounds, and the next stage is 96 levels if it doesn't breach. Now, when it comes to the metals, that's a whole different story, because I'm on the daily chart, I'm labeling XAU gold in a flat correction for this B. So we have the cycle wave A right there. Yeah, December 2015. We all know it actually started rising right there, and I was actually present there, active, right? I was also active in December 2016, also active here. Here I had some issues with this very complex structure, but I did manage to see a drop coming. This is when gold made a crucial decision, and I was actually present right there as well, looking and observing. Yeah, but right here, gold actually made a surprise, right, when the weekly trend line to break out, right? And this actually broke the 61.8 Fibonacci extension on W and X, this orange, yeah, primary scale. So what I'm seeing is, as you can actually see from the arrows there, I was actually active here, and in the previously mentioned video, I am explaining this possible rise, yeah, in a corrective move, but still a rise, okay. But I am looking I will be looking very closely. Should this 100% levels be touched, because this is where a pattern should be ending. Yeah, I mean, in this type of flat correction. Because of the fact that this swings did not reach higher than this point in a flat type of correction. It is not a zigzag, it is a flat correction. So the point is that because this move did not go beyond the start of this move, then this means that this move should go beyond the end of this move for a minimum of 100% on the Fibonacci extensions, right? From W and X, orange primary scale, which is this. Okay, so this is basically gold. I am going to go on the smaller time frames. I think I'm taking too long for the daily time frames. We will return on the daily time frames and expand on this, but let's move on intraday. So from now on, the charts will be on the 2-hour time frame. Yeah, so I have the dollar index right here, and as you can actually see, I've been labeling the actual top from 1 2 basically in a 5-wave sequence, and for Elliottians this should tell you something, right? Because a pattern cannot be the entire pattern with only this move, right? Unless it's completing one pattern here, but the way it moved up doesn't really show that possibility. Not to mention that we have an overlap right now, okay? So if this is destined to be an extension, this obviously should rise right now. However, take a look at this trend line, the red dotted trend line right there, and you can actually see that it's very interesting that what it's doing right now, right? Because the way I'm labeling this is in a 3-wave sequence with A, B, orange, and then C, minute, right? Thus possibly completing, sorry, minute reds. Yeah, those are minuets, the orange ones, degrees. So what I'm inclining for is a 5-wave sequence, possibly terminating right here. We have some sort of bullish divergence intraday, and I would be looking for a 3-wave correction until the 61.8, which is something like 95.40. We'll see what happens there. The reason why I'm saying that is because the XAU structure is basically showing possibly more advance ahead to the upside. Obviously, after once such a pattern such as this corrective would actually unfold, right? So it's curious to see because the market is kind of pointing out towards multiple possibilities for reversals and contradicting the dollar's strength today, right? So it's I'm very interested to see what's happening. It is exciting. It is exciting. Now, silver, however, has shown much more weakness than gold. Still the 2-hour chart, all charts will be on the 2 hours, right? So most of them. Now, the way I'm labeling this is in a double free as a complex structure because the way this developed with an ending diagonal right here. Okay, and I'm labeling this as a possible false breakout in the X wave followed by a possible rise. I mean, not sure if it's gonna be just like that because silver, I've noticed that this it's very violent, very violent. It's very volatile, and for those who are not experienced, I would not really recommend silver. Yeah. Now, crude oil, however, is is showing me a pattern which is indicating possibly more weakness ahead in an impulse. Yeah, so I'm labeling it as a very complex structure in this wave BWXY double free, yeah, with an expanded flat like this, and possibly starting an impulse with a correction and therefore more downside to actually occur. Obviously, this setup would be invalidated by a move higher than 71.40 because a wave 2 must not exceed the start of wave 1, so it mustn't go there. If it goes, then the setup and the view is invalidated, right? And I will go more into these things. Now we have only 2 minutes. Let's jump on the euro, which is the start of the day, I suppose, right? Everybody's curious if the euro would rise today or if it will drop. Now, the way this looks, it's quite simple, to be honest with you. Or is it? No, most of the times, what I've noticed is that the non-farm payrolls, the NFP release, kind of lines up for both scenarios to be to be on the table, right? And I mean that's why Elliottians, they actually have a main count and an alternate count. Now, for this to be a wave 2, this should have retraced at least 50 or 61.8 for a proper move. However, it did go until there. So I'm not sure if I should treat this as the entire correction. However, I am labeling it as such, yeah. And the way it moved on the upside, this could pass on a very small time frame as a leading diagonal in a 1, then 2, and then an extension, yeah, should and the alternation between these possible two waves would make sense, yeah, because even corrective structures, they alternate one another. So we'll actually see. Now the point is that I think the NFP was actually released, so we're gonna jump on the economic calendar just for us to see the release. So I would expect basically mixed data towards, let's say, slightly good for the dollar short term. Yeah. So let's just see the actual results. It is curious to see the release itself. However, I would be looking at the charts because this view could be invalidated if this moves rapidly on the downside. However, as you can see from the arrows, I would be expecting, personally speaking, and this is all just my personal opinion, of course. Nobody needs to follow this, but a move lower than 61.8 could be fatal, could mean business for the Euro USD. However, the upside is still a possibility. Yeah, some people would be waiting for this. Now, average hourly earnings surprise 0.4, good. Participation rate not so good, and non-farm payrolls good. Unemployment rate increased. So mixed data and the surprise, I would say, yeah. So would make sense for the non-farm payrolls to be okay. Manufacturing sector in the United States was okay. This, I mean, was good this week. Non-manufacturing as well, yeah. And more jobs were added, yeah. And also the average hourly earnings actually supports a bullish dollar. So according to this, yeah. Now what we're gonna do is we're gonna do the interesting part. So I would actually say that according to this data, the sentiment to kind of switch in favor of the US dollar. Yeah. So back to the dollar index. The only thing is this needs to be sustained. Okay. This really needs to be sustained as in a sense that it would have to exceed the 61.8, yeah, but most importantly this 61.8 as a wave 2, because remember the structure can actually extend towards a complex one, right? In a sense that this to be the A, this to be the B wave, and then the very aggressive rise in the C, but still 96 would be the main focus for the dollar index. Now it's not like I wasn't actually considering this rise with this arrow, but I'm curious to see what's happening, about what would happen at or around the 61.8, 50%, 61.8, 95, 30, 95, 40 for the dollar. Because remember that the data is not awesome, the data is actually good, mixed, but the unemployment rate actually weighs, and that's quite important, to be honest with you. Honestly speaking, I mean, let's say for instance, if you think about it, jobs were added this month, but what about people being unemployed, right? That's for long term. So let's jump on gold right here, and I was actually expecting, let's say for instance, this pattern to possibly complete. Now it kind of seems that structures are possibly um, lining up right now. So the NFP release could actually be the piece de resistance for the last C leg of the needed structures. And what I mean by that is basically this last move to possibly complete the structures on a lower time frame. Okay, so yeah, that's basically it. Now let's go for the charts, right? So I'm on the dollar. I was on the dollar index. I'm on gold right now. Let's switch to silver 2 hours, and as expected, obviously I'm expecting more downside. This is very sensitive. the silver just completed one pattern there. This could actually complete this drop, so it can deliver a proper bullish divergence, and I would see this something like that. Yeah, I mean drop, a rise, and then another drop for the possible bullish outcome. We'll see if that happens, right? Let's see what's happening with crude oil right there. Yeah, still kind of needs that last leg for the bullish divergence. Yeah, for this move, corrective still, and this would be quite interesting to see if it will be corrective. Okay, so sorry about that. I cough from time to time. I was just going through a flu recently. Anyhow, so it hasn't, the way this moved, yeah, on the euro, it hasn't invalidated the structure yet. As I said, something below this would mean business, but obviously this will be the first my first option, but it's not invalidated. The upside is not invalidated yet. Okay, so there's still chance for the euro to actually deliver a rise. And the reason why I'm looking up is because, for instance, yeah, after that very complex structure, and I will go into it on the daily chart for me to explain it to you. After that structure, this happened, right? And this can only complete that structure and the euro to actually drop if it's a running flat. And I will explain to you why. But firstly, I need to go on the daily chart on the euro. Yeah, and I will be going more in depth, but with this view, for instance, yeah, with the euro view on August 13th, right? I was actually explaining this fractal pattern. This is a pattern, by fractal, what I mean is patterns reoccurring, reappearing, the same pattern being as fractal, reappearing on a smaller degree. Okay, and this actually started rising from there. And what I'm just going to explain to you basically what I mean. So from it's basically, I took this pattern from the back in March 2015, from March 2015 until December 2016, when the euro actually rose. Yeah, and you can actually see that I was basically active right here. I'm gonna go there. Let's see, but listen, let me just give you an example, yeah, on these type of things. So let me just copy this pattern, yeah, just gonna copy it, and we'll make it smaller so that we can actually place it there, so you can actually understand the meaning of my power. And this is basically one of the views which I've used there. Okay, now I will zoom in so we can actually see it together in depth. Yeah, so in a nutshell, after that pattern, euro started an impulse, yeah, a sustained move on the upside. And let's check this. Let's check this a little bit. Yeah, so we have here three legs on the upside, corrective, and then higher point than this, right? Three legs on the upside, corrective, higher point. Then three legs on the downside with an aggressive sell-off, yeah? And then 1, 2, 3, 4, 5. I mean, almost, yeah, but anyhow, we have a rise here, corrective, and then an ending diagonal in the C leg. Then followed by a drop, yeah, and some sort of complex structure with some triangle or something, yeah, which is basically this, yeah, and then the drop, and then the drop. And we all know that the euro in December 2016 started rising with an impulse, yeah, which actually is happening right now. The only question is, will this gain support for the impulse right now? I'm very curious to see that, because if not, then this could actually pass as a running flat in just like the dollar index. So it's actually quite interesting. It's a decisive moment, right, for these patterns. A running a running flat, yeah. Basically, for this to be the A, this to be the correction in the B wave, and this to be the C leg, and that's it, right? This to start crashing, and the third wave, right? So honestly, it's quite hard for me to really incline for that just yet, unless the structures will be invalidated on the lower time frames. So it is going down as of course predicted intraday. Okay. Now that doesn't necessarily mean that this is it, and basically that the patterns are just like it's happening. The euro is crashing. No, as I said, the euro still has a chance, and a leading analysis tool such as that fractal pattern, which I just went over, yeah, would open one's eyes a little bit. Okay, so basically, let's say moving on to the pound US dollar, and this analysis is best done while it's actually happening, right? So I need you to understand something. When this is the time when the market is moving. This is the best time to actually analyze, right? So we'll take our time. We have time. Those of you who are who are actually in the webinar, those of you who are watching me on us on Facebook, yeah, will know more. Yeah, I'm gonna go, as I said, I promise I will go on each and every chart. If you do have an asset or a pair or an instrument for me to take a look at, just write in the question box there, and we'll take a look at it from time to time so we can actually expand. If basically if you have something that you're looking at and you're interested to get a second opinion, I would like to to possibly help out. Dollar yen, yeah, as I said, I am inclining for a strength, possibly coming for the yen, yeah. But the problem is that I mean, it's not really a problem, to be honest with you, because um, this is still consolidating, okay. And logically speaking, if this was the end, then they should have started an impulse. And there is no way this correction could have gone there one time, two times, creating new lows, right? In a one and then two for the second wave, yeah? This should be like this, yeah? Two. So it went lower than that point. So it's not really, really inclining for a rise, not just yet, yeah? I'm not saying, I am seeing a very powerful USD yen approaching, basically as a pair, and possibly starting a very an impressive bullish run. However, for that to happen, I would be comfortable for me to see this pattern possibly ending, and I'm gonna go on the daily chart later on, just for me to expand on that, right? So let me just take one pair at a time. So we'll be, let's say, on the euro, yeah. Let me just actually let's take it. Yeah, let's stick with the euro for now. Yeah, let me just go on the euro. So I explained basically the fractal pattern, and I'm just gonna go through the wave count. The way I'm labeling it is from December 2016. I'm labeling it as an A, and then B intermediate turquoise, and then the rally. Yeah, 1 2, and then 1 2 3. This is the acceleration gap, that's how it's called. I mean, when it makes a gap, usually it's a wave free starting, yeah, usually. So it's called an acceleration gap, and it usually happens in a wave free. So this is possibly confirming that this is a wave free. And if you look at the wave count, I am labeling it as an extension in the fifth leg of this free, yeah. Then corrective, of course, yeah. And let's say, for instance, during this correction, everybody was inclining, and take a look what's writing here, yeah. Don't All right, now everybody was bearish on the euro. So I said, I don't think just yet. So it did indeed go towards 1.24, 1.25, and even after that, I said that there is still a possibility for 125, yeah, and again that message right there because of this 161.8 fibs from that, right? So this was back in December 21st, 2017. So you see, December is an important month for metals and euro, yeah. And if you think about it, bad, kind of bad, bearish for the US dollar. So yeah, as you can actually see, I was in intraday. Of course, I have some views on this from even from the very top right here. Okay, now the question is, what type of pattern is it? Because it moved in the free legs. Yeah, I'm labeling it as a Y, thus terminating, possibly ending a cycle wave W. Yeah, which would incline free legs on the downside for this X, and I'm labeling it as an A. I would like to see an expanded flat in this B. However, if this is a running flat, then this means that the pattern has just ended and euro could be dropping and dropping. One thing that I do know is that a breach of the pivot 1.15 could be serious, and that's where sellers could gain more confidence. Yeah. So next, the pound dollar. Yeah, even the pound back then when the USD started falling, and I need to zoom in on this. Yeah, back then, let's say on February 23, 2017. Yeah, so right there, I actually said that the pound could gain strength, and it did. Yeah, started an uptrend. However, this uptrend, I'm labeling it as a corrective, and the reason behind that is because the larger degree structure, the larger picture, the higher time frames are inclining towards a corrective here. Yeah. You can. I have a question here. I do have the live account. Where can I get the fourth part? Well, fourth part, obviously, if you're a live account holder, shall be sent towards your email address. Yeah, so don't worry about it. It's all good. Now, back then. I'm sorry about that. Just got interrupted a little bit, but it's okay. Anyhow, on February 21st, 23rd, yeah, 2018. I was actually inclined towards possibly the last rise for the pound US dollar, and it did actually rise all the way towards 1.44, close to it, and then started that expectancy, exactly right there, as these things show you here, right? So it was a big drop, yeah, but even at the bottom right here, I was present, and exactly when the pound um, commenced this huge drop, yeah, I was paying attention towards some vibration levels saying that the pound could become a little bit bullish for the short term or medium term. So as you can see, patterns are kind of aligning, and the yen, the reason why I'm labeling that is because I mean inclining towards a softer dollar short term, because if this happens, it's a sea leg, and it will take a short amount of time, that's for sure. Okay, now the point is, the rise is actually quite clear. Yeah, it can either pass as a wave 1 or A. Uh, honestly, in my view, personally speaking, this in my eyes can only pass as an A, because if this is a 1-2, yeah, the next, basically, if it's an extension, yeah, cannot pass as a wave 1. Doesn't have 5-wave sequence, only has 3. It is indeed running higher than this, but still it can be either a running flat or expanded flat, and the way it's developing this structure right here, this could actually be corrective, implying possibly more downside in an expanded flat type of structure, yeah, before it really moves up. And if this would turn out to be correct, then the next pattern would be this, yeah, because it needs to provide that type of swing in order to complete the larger degree pattern. So that's the reason why I'm saying that short term I am inclining towards a stronger yen, medium term towards softer yen. I mean, by yen I mean the yen itself and not the US dollar yen. But yeah, so let's basically move on. So let's take a look at the uh, German stock exchange, which is one of my favorites, the DAX. Yeah, DAX 30. Me and DAX go way back here, and let's say recently it's doing something very interesting, just like gold. Yeah, just like gold, there breaking this support trend line. It's quite important because this could be serious, and 100%, 50% for a cycle wave 4 correction. Yeah, this would mean possibly more weakness ahead for the DAX. Yeah, so before I go into these indices and continue with the analysis, and because what I'm gonna do is I'm gonna continue with the intraday analysis, but I'm gonna while these moves are actually occurring, and the market to actually digest these figures, we'll give it some time. But in the meantime, I'm going to continue with the larger degree structures and the daily charts. Go into the indices, the US stock market, what I'm possibly seeing, the VIX possible spike volatility, possibly returning the bears, possibly returning in the US markets, and expand more in regards to a possible flash crash occurring soon. This is just a theory and an idea, but the evidence is quite interesting. Yeah, it's quite amazing. So we'll see this if this euro drop will actually start. We'll continue. But yeah, so next, what I'm going to do is I'm going to talk about this the full cycle on the, let's say, for instance, Dow Jones, S&P 500, Nasdaq, etc. Yeah, and expand more more into them. So I'm going to continue with the indices. I'm going to go over DAX, the Germany 30, yeah, DAX 30. Then I'm gonna continue with the Dow Jones, S&P 500, Nasdaq, the VIX index, and everything. Yeah, I'm just gonna the Facebook live streaming will be interrupted. Yes, and if you wish to continue, then you will need to join the live session in progress as a live webinar. Yeah, because exclusive information shall be mentioned during this and continuing on. So for those of you who are actually in, you're in for a treat, because I'm going to talk more about cycles and what's possibly going to, well, what could occur. Yeah, nothing is for sure, but the possibilities, whoa, it's quite interesting. It's very interesting. This, in my personal opinion, these are the best times, the most volatile and interesting times to stay, to hang around in front of the charts, to be active, to making important decisions. Yeah, so we'll continue with the actual attending for attenders and attendees. I'm sorry, for the webinar. So that's done. Okay, now guys, let's talk a bit more like freely here. I will be honest. The U.S. stock market is not this is important right here, the Nasdaq, because if it continues, this could possibly confirm a breakout of this channel, and it's really for breakout traders out there, you know exactly what I mean, and I'm pretty sure you're looking at this with interest. Yeah, let me just load the Nasdaq on the daily chart, because I have something to show you right here. Yeah, and it's quite important. I've been keeping this for the attendees. Yeah, because the way I'm labeling the Nasdaq on the daily time frame is in an extension in wave 3, yeah, where the free of freeze presents obviously the extension. Yeah, so I'm labeling it as cycle wave 1 and then 2 green, then primary 1 2, and the extension itself intermediate 1 2, minor 1 2, extension in free, minor 4 5. Yeah, then correction in intermediate 4, thus completing even wave 5 presents the extension in free and the channel. Yeah, so it kind of, from the Elliott wave perspective, meets all the rules, yeah, for this to perform the last fifth wave in the free. And this is back in January 2018, start of the year, where I was actually somewhere around here. I was actually looking at the ending diagonal right there, which I've noticed and mentioned. So right after that, a sharp fall occurred, and the way I'm labeling this is as a running flat for Nasdaq. Nasdaq is quite known for this type of structures where the corrective within that swing exceeds the start of the previous scale. So, but the next move does not exceed the first move, right? So it's basically a running flat right here. That's how I'm labeling it. And the way it's rising, quite interesting, right? The way it's rising, it's typically a wave 5 with an ending diagonal in the fifth, terminating. Could be even, let's say for instance, this could even pass as an A, B, C, where this is a proper, legit ending diagonal 1, 2. Just wanted to give it the benefit of the doubt right there for another squeeze up. However, doesn't seem like it's gonna doesn't really seem like that. It's quite dangerous what's doing right now. If it doesn't bounce today, it's quite bearish, I would say, especially if, let's say for instance, some conservative analysts or traders would be, of course, looking or could be looking for, could be waiting, and then waiting for the next possible bear flag or correction as a possible setup or confirmation for much more downside to come. And you can actually see the arrows in my views where what I'm seeing this to go, to possibly go, of course. So where was I? This could be a 1 2 3 4 5, and this is where it ended at 7685. Yeah, and during that, I'm not sure where that is, but I was actually active right here, mentioning the 7,500, 7,550. So it did go there, reversed immediately, then continued going more. And I do believe that I do have that view, right? With 750 being as the actual vibration zone, one of them, right? The first one was 7,500, which actually was mentioned before, drop occurred and then breach, and now it's interesting what it's doing, right? Nasdaq, is it going to provide that last squeeze on the upside, right? Or is it just done and it's actually starting? I'm giving, as I said, I'm giving it the benefit of the doubt. However, my views were right there at 7,650. Yeah. So not to mention that multiple counts are actually lining up there. Multiple fibs are actually lining up. Yeah. So it's interesting to see next week. And if indeed because this would be in line with the VIX spike. And what I have here is the VIX, the volatility index on the 2-hour chart, and I'm labeling it as a corrective piece. The entire structure would be corrective, only that this C leg could be extended and have an impulsive 5-wave sequence, which, if I'm right, we are basically, let's say, in an extension right here to possibly start a third wave, while everything else would correct. But since Nasdaq, I mean, well, Nasdaq seems to be one step ahead of the other US indices, and there is a divergence going on between them, because while the Nasdaq was creating new all-time high, new all-time high, new all-time high, new all-time high, yeah, Dow Jones from February's fall, which is right there, the all-time high, never exceeded the all-time high, yeah. So Dow Jones, after the drop, had a lower high, higher low, lower high, higher low, and now it's practically diverging, right? And there is a typical divergence right there going on. As for the S&P 500, it kind of looks like it could deliver one more rise there. However, it is indeed interesting to see if a breach would actually occur from this channel. And the way I'm labeling it is basically after the drop, I'm labeling this as a double free in this red B intermediate. Yeah, can go, already created a new all-time high. Yeah, so it's actually fine. Now the way I'm labeling it is as a running flat in this B wave, this minute scale. So the structure like this, and then continuing for the upside. But what I'm seeing in the C leg is basically an ending diagonal. Yeah, so I'm labeling it as a 1, 2, 3, 4, and we'll see if it delivers the last fifth leg. The reason why I'm saying that is because the US, yeah, the Dow Jones actually hit 100% Fibonacci extensions from W and X, so it could be, I mean, from structures wise, from a Fibonacci perspective, this could actually mean that the pattern could have ended. Yeah, nothing is nailed in the wall. It has the right to end at the 100%. It's okay. Now the question is, will the VIX continue the spike and these indices to, I mean, for the sell-off to continue, or will this be a simple ABC structure for this 4 and then to gain support? That remains to be seen, of course, in the coming days. So while this data would be digested by the market, I believe that we're starting with next week. We're going to have, I mean, I'm personally speaking, I'm going to have much more clearance on the real direction of the markets. Now, speaking of Dow Jones, yeah, what I have here in front of me is that 100-year historical chart, yeah, from 1914. And the way I'm labeling this is as obviously the you can actually see the labels here. Grand Supercycle Red 1, yeah, and then Grand Supercycle Wave 2, which is the Great Depression, yeah. This was a very bad time and a sell-off, and then basically the third wave with the extension to unfolding, yeah, the Grand Supercycle 3, which presents an extension in it, yeah. So let's just see. 76 is somewhere around here, then followed by 87 drop, Black Monday, and then the rise up until 2000s. Yeah, let me just zoom in right here. So early 2000, the dot-com burst, which is labeled as a complex correction in, I mean, the double free in an expanded flat as well for this red Grand Supercycle 4. So drop in the dot-com burst, then rise, and this is the 2008 recession drop. Yeah. Now the way it's unfolding on the upside, it's actually lining up for this to be the third wave, the peak, I mean, the one and the drop, the peak which actually was actually reached in January 2018, the peak to be a primary scale, a primary degree wave 3 of a cycle wave 5, which is this black 5 right here. So this could actually mean that while this correction would, if I'm right, of course, while this correction would complete, then the bull market return for the last fifth leg on the upside, and this would agree, of course, with everything. So the last bull run, and then this is scary, right? Because 5 waves on the upside are ending, and a correction would mean, I mean, at least, let's say for instance, at least 30%, which are December 2009 lows. Yeah, very, very interesting. Now for this, of course, this will take some time to occur, but as you can actually see, a start of something could be right around the corner for the US indices. And globally speaking, I don't know if you're looking at the Asian markets and the indices there. Yeah, Shanghai Composite, let's say the Nikkei, let's say the UK, yeah, FTSE 100, it's dropping like a rock, just like DAX, yeah, just like CAC 40 in France. Everything is basically, as you can actually see, something is occurring, possibly starting globally. And President Trump actually came back with a lot of volatility, red aura around stock markets. Yeah, with the trade war, the talks, with decisions, with tweets, with yeah, it's a very interesting time. As I said, it's if you know how to look at the charts, if these fundamentals can be used for confirmations or red flags, basically warning signs for next big swings. Okay, and if you think about it, fundamentally speaking, let's say when Republicans ran the presidency, stock exchanges dropped, crashed, this type of things, right? During Obama's period and Bush, sorry, not Bush, Clinton's period, stock markets rose. Yeah, when Bush took over, and then now with Trump, something is looking like its market is shifting, right? So yeah, now the the reason behind this is, let's say, firstly, this drop on the Dow Jones cannot pass as the completion. So this is the 4 and then we go up. Yeah, even if it went up, it's practically diverging with this higher lows, lower highs. So this cannot pass as a triangle neither, right? Because that's how it started. Yeah, if this is a wave 1 and the wave 2 and then extension 1, 2, the 2 is going lower than the other 2. Doesn't make sense. So it's not impulsive. It is correcting. It is going on the upside, yeah, but it's a very unhealthy upside in my personal opinion, right? So moving on, let's go to the back to the forex pairs, yeah, on this intraday, and let's say continuing with the intraday charts. Would be comfortable, let's say, to see a possible running flat on the pound dollar, because I'm labeling this as a wave A, the rise. Yeah, the rise was actually occurred right here. Okay, let's say for instance right there. Yeah. Okay, so the way I'm labeling this is indeed as an expanded flat. Yeah, as you can see, the expanded flats, running flats are quite common in this type of period. So what I would expect here is, let's say, the same thing, because this drop, I'm not sure if it's wise to treat this as the 2. Yeah, not to mention that if should an extension actually to occur, yeah, this rise doesn't really look impulsive. On the contrary, it kind of looks corrective still. Okay, so yeah, that's why I'm thinking that this could be the A wave, this could be a B wave in Either running or expanded flat would be comfortable with at least 61.8 on this rise. Yeah, let's say 50%, 61.8, which are basically these vibrational levels right here where multiple decisions were made. Yeah, I mean, this is a vibration zone right here. Peak, breach, return, vibration zone, support, breach, support. Yeah, I mean breach. So I would expect the pound to possibly continue dropping up until down until 1.2860 as a level. Yeah, the euro would need to do something right now, because if it doesn't do something right now, it's quite dangerous. However, there is one more chance for this to bounce from I mean, at or around the 61.8, which the exact level is 1.465. Okay, sorry, 1.1465. And the reason why I'm saying that is this could pass as a W, this could pass as an X, then A, B, and then this to be the C, and it looks impulsive. Yeah, so correction, third leg, fourth leg, fifth leg, divergence, and then to possibly continue. Now, there is a realistic chance for that as well. And if that's the case, then the structure would be like this, and this is how a channel should be drawn towards that, because if that's the case, then this would need to be a corrective structure in a larger, I mean, some sort of a bull flag. Yeah, it's going to be a double free if this is correct, in a sense, W, X, Y. Yeah, like this, and this is the Y should have a bullish divergence at the golden ratio 61.8 of the rise for this to pass as a wave 2 or a B wave. Regardless of that, the structure would actually align. So I'm not in a hurry to decide that the euro is fully bullish. No, I'm actually patiently waiting, because as I said, I'm inclining for this rise, I mean the bounce actually that actually occurred right there, not to be the only piece. Okay, so moving on to the pound, I went over that, and I'm labeling the pound in an ABC, yeah, in an expanded flat, as I said. This agrees with the euro, what I just said. I mean, possibly more weakness for the euro ahead while the market digests this NFP, and who knows what could actually happen, because we get surprises and tweets all the time, right? And decisions early in the mornings. Okay, sorry. Anyhow, and this would agree with my view right here on the yen. Now, the problem that I had with the yen was the fibs weren't met. And what I mean by that is 61.8 was actually touched, 61.8 of this move, which is this one. But for this to be the only, I mean, the only piece tagging the 61.8, I wouldn't really be comfortable with it. Not to mention that, you know, the way it moved, it's a free, yeah. So it's either an A or a W on a larger degree scale. So let's say it's either it's the first leg, either an A or a W. It's okay, right? And this, if this is the X or the B, this should have went in an impulse. And the problem that I'm having is, let's say for this to be the 1, 2, and then 1, 2, 3, 4, 5. I would have an issue with that, because the fifth leg is not an ending diagonal, and it kind of looks like a free wave sequence, right? Hence the reason why I'm labeling it as an A, B, C so far, yeah? And if this was an A, B, and then this C, I will force a truncation on this, because it didn't reach the higher top. So what I'm inclined to think is that this is an expanding triangle, yeah, diverging triangle like that. So this B would be moved right here, while the C would actually take place for the 161.8 extension from W next, then ABC, right? For this pattern to possibly end as an expanded flat, while the vibration zone would be retested in a wave B. So we'll actually see how that occurs. Now let me just put that right there. And what I'm gonna do is I'm gonna do it like this. Okay, just leave it there because I am actually inclining towards that type of scenario. Yeah, because it meets all the actual rules for that. Okay, now I know it looks dodgy, right? But this can also pass as an A, B, C, a W, and then this X, and then the Y. So regardless, kind of looks corrective still. So I'm not sure about this um, pattern. I mean, what to decide on it, but just gonna leave it right here. Just gonna leave it for now like this. Yeah. And there's an interesting pattern right here on the US Swiss dollar Swiss on the 2-hour chart, and I was indeed looking at it basically bearish on August 7th, yeah, with this view for it to drop, or I mean to possibly drop towards this target 0.9650, yeah, from the 0.9970 levels, as I was with the yen, actually, to be honest with you. But the yen is still consolidating via that zone, so not sure. Yeah, 11150 actually held as the view, but right now I would actually be expecting something to actually occur. Now the way this dropped in the fifth leg, let's say if this is indeed a fifth leg, it's a 1-2, then extension in 3, and this would represent the wave 4 followed by a proper drop for a proper divergence, bullish divergence, yeah, to occur. But I would see the 200% as the next fips, because in an extension, yeah, because this actually presents an extension in the fifth leg of the of the free, yeah. So in an extension, the next fips would normally be hit. I mean the 200%. Yeah. So we'll actually see. As you can actually see, the structures are kind of lining up. Back to the dollar index on the 2-hour chart, we do have a reaction right here on the 50% zone, 50%, 61.8. That zone, you know, 90, 95.30, 95.40, and I'm curious. I'm actually curious to see what's going to happen there, right? By looking at the others, the euro could be set for that. If not, the next stage, I mean, if it's continuing dropping, and the key right here is very simple, right? The way the next move will look. If it could look like this, then clearly it would mean probably, I mean, most probably would mean more downside before even thinking of continuing this move. And I mean, I am inclining for that. Yeah, I will give you that. No issues. Yeah. Aussie dollar. The way this structure looks, and I'm using some harmonics right here. Yeah. The way, I mean, this could actually pass as a bullish harmonic right there, and I mean XABC D, but also as a um, corrective B, in which B actually goes lower than the A in another type of structure. Yeah. So the way I'm labeling the basically the corrective is as an A, B, and an extension in 3 with a triangle in the 4. And the triangle actually represents a struggle and the final piece towards a completion of a larger degree pattern. And what do you know? We do have divergence right here, a bullish divergence. We do have a reaction at the 161.8 of A and B right here. Exactly what this B leg actually needed for its C extended leg for this to continue. And well, as you guys can see, multiple things are lining up, right? And the NZD, New Zealand, the Kiwi, kind of has the same structure, didn't go below that. However, doesn't mean that it can't, right? This could actually drop more and give a proper bullish divergence right here in the proper fifth leg, while a rise could be imminent. We'll see if that happens, right? The CAC, the let's say the CAC right here, I was actually paying attention at those tops right there at 5645, and exactly when it started, you know, dropping right there. And indices, European indices, I'm looking at them with interest because the structures are interesting, and we, there is a gap right there on the there's a gap right there, but also a gap right now, and this could actually fit in that previously mentioned wave free advance, yeah, gap, advanced gap. So yeah, moving on to the German stock exchange. Let's say back then when the peaks were in play, let's say 1.32, 1.3150, yeah, I was actually looking at this with bearish views because an ending diagonal was right there and the completion of a larger degree pattern, yeah, followed by what we actually see right here. Okay, so now later on, yeah, after this current rise, it's the DAX actually gave gave a breach and then a bear flag. Yeah, I mean a corrective instruction. Now, as you can actually see from this arrow, yeah, this is exactly what it gave after that. So it is interesting. It is interesting to see the DAX. Now, how I'm labeling the DAX isn't an impulse, obviously, right? But with an extension in the free of freeze. And by looking at it, I do believe that the bullish divergence is there, exactly what wave 4 would actually need. So I would see a correction for the DAX, while it could bump its head in the previously broke levels, 12,150, 12,200, even somewhere around there. We have a gap right here. So it could actually start correcting a little bit before more downside, of course. So we'll see how this occurs. Now, there is something interesting with the euro pound, and I've been looking at the euro pound with interest back in August 8th, right here. Yeah, when I said that it could be approaching some dangerous grounds around 0.90750. Yeah, and then immediately from there, from these started dropping. The way I'm labeling it, this is in an intermediate C leg, a bearish impulse. Yeah, a bearish impulse for the downside, and I'm labeling it as minute 1-2 red, then minuet 1-2, and then the extension to. So far, so good, right? It is actually dropping. And should you think about it, if the euro GBP would drop, this means the pound dollar to rise. Yeah. And the only way pound dollar would rise is if euro USD would rise, right? So you see, the patterns are kind of lining up so far, yeah. Just for you to get a global perspective of on these markets. By the way, guys, keep the questions coming, yeah, and let me know if you can understand what I'm saying perfectly. I mean, the right way. Some feedback, some light feedback right here would come in handy, yeah, as I am speaking here. And if you have questions, or if you have something to say or add, of course, I don't mind at all. Just throw in the questions, yeah. But if you feel that you're getting a feedback from the actual market, and you're basically gaining more knowledge and valuable information, of course, from my side, please let me know. Just write in the question box and let me know if this thing helps you. Yeah, if my analysis is helping you. I did mention the NZD. I'll go back to it, and let's say, for instance, straight to the point, the 200% Fibonacci extensions would be in focus right here, even though new low has been created previously from the previous bottoms. Yeah, where I actually, let's say, I did post this intraday view when I said possibly rise and then more weakness for the fifth leg before a rise would be in place. So this is what happened: correction, downside, bullish divergence, boom, a wave. Yeah, and in the meantime, what it's doing is, as I said, correcting, and this is a harmonic pattern right there, similar to the AUD USD previously shown. And yeah, the 161.8 have been reached, and so AB, then 1 2 1 2 3 4, sorry, and then the extension. So I'm thinking that this 4 could actually be here, and I mean, this bottom could be basically the extension free of freeze in extension in free. Yeah, so this could go a little bit lower, and I have a line here with the next important level, 0.6520. Yeah, so we'll actually see. This is a B wave. It is allowed to go lower than the start of A. It's okay, right? Regardless of the structure. But I would actually see, let's say, for instance, 1 2, then 1 2 3 4 5 4 5, and this is what I would look for: a bullish divergence right here. Yeah, and as you can see, the levels, I mean, those levels haven't been touched, and this 261.8 is also important. I didn't want to look at it before, but now I could be considering it. And as I said, there are two levels in focus: 0.6520 and 0.6490. Yeah, so we'll keep an eye on those, but as long as it doesn't travel beyond the recent local low, this could still pass as a wave 2 and to rise from here. Yeah, just as a precaution measure, could be right about there. Yeah, so moving on with the euro pound. Euro pound, yeah, there's no point of loading this again. Yeah, these were my views, and they started dropping. Now another interesting view is the pound Swiss. Yeah, a pound Swiss, which is looking like it's doing a possibly ending diagonal in a C leg. I mean, because we do have the extension in free, and this is where I'm having difficulties. Oh, wait, whoa. Okay, let's just reload this. Okay, that's where I'm having difficulties, because I don't know if I should label this here or here, and then just have a normal ending diagonal for one more, or if this is just it's correctly placed right there. What bothers me is this drop, right? Because wave 5, if wave 3 was extended, wave 5 should resemble wave 1 in duration and length. It is quite shorter than that, right? So this means that this zone, the 100%, is indeed, I mean, 100% of A and B, right? 100% Fibonacci extensions could be in focus. They have already been met right there. It bounced exactly from it, and we know what happened there with the pound. Yeah, against the dollar, it could be looked as a fake move, yeah, in the C leg to terminate this B in an expanded flat. But with the pound Swiss, this could be different. Yeah, because even if I look at the dollar Swiss, I'm labeling this drop as a leading diagonal in A, and then B, reminding you that basically that the Elliott Wave ebooks are available to download during the webinar. So there are some handouts, you can download them directly there, right? Okay, you're welcome. You're welcome, Shaheen, if I'm pronouncing it correctly. Share your contact details again, please. Well, you can find me with You can either find me in the Orbex blog or with Orbex. Just give me a call if you wish. Okay, or contact your account manager and we'll set up a session. Yeah, I don't mind at all. I like helping people. Anyway, pound Swiss. Yeah, there is a bullish divergence in the menu here. However, would be comfortable with one more. Yeah, one more for a proper ending diagonal right here. And this would be like the unicorn at the end of the rainbow for me, because my view would be closer to the truth. Yeah. And speaking of the pound Swiss, I was actually active on the tops right there, yeah, and it actually dropped 1,150 points in my direction. This is a daily chart, by the way, and let me do that again, yeah. Back on April 4th, on the daily chart, daily time frame, it was actually approaching a multiple Fibonacci, like lining up, yeah. This is how they line up, by the way. Fibonacci retracements of the previous fall right there, and structure complex, boom, drop, yeah. So now at the bottom I'm active again, of course, right? So you see the patterns are kind of lining up. The market is kind of in the position where it will possibly show a market shift, a shift in directions and correlations and everything. So something big could actually occur. Moving on the yen pairs, yeah, pound yen. After it broke through the channel, yeah, after it broke through the channel right there, there's a harmonic patterns right here for you guys to take a look. And this pattern is what I used to confirm basically this corrective piece. And if you take a look at this one, this could actually be AB equals CD. Very easy structure right here, yeah, for this X wave. So hence the reason why I posted that, where it kissed the lower base, yeah, lower channel after the breach. So boom, started dropping, yeah. Now the way it's developing right now is obviously as an A wave, right? So the way I'm labeling this is as an A, B, C, yeah. We have a zigzag or a flat. Actually, it's a flat, but anyway, it's a W. And then the X wave. And then A. I would be looking for something like something here. And the way I'm looking at this is another type of harmonic. As you can see with the yen pairs, I'm doing this harmonics, which I actually. So the way I'm seeing this is like this, yeah, bullish butterfly right here, followed by something something like this, yeah, ABC. Sorry, this is basically the pattern that I would be looking for, yeah, this one, which is actually this one, yeah. So let's say, for instance, if this delivers another consolidation such as this one previously, then this could be in play, yeah, making this structure again possible, right? So we'll see. We'll see. Now, moving on the euro, euro JPY. Yeah. Oh, I have a very long question right here. Okay. Depends if you're talking about the services. Listen, Shaheen. I don't. I think you should contact someone from Orbex. Yeah. I'm pretty sure that if you do have a live account, then it can be set up, and we can actually start collaborating if you wish. And I'm pretty. I mean, by the looks of it, you do. So anyhow, you don't need to. You're asking about the payments. No, for Urbex clients, this is payments are not. You just need to have a live account, and you can trade whatever amounts you are comfortable with or wish. So anyhow, let's just get back to it. Okay. Now on the euro yen, again, same time like the pound yen. Yeah, the drop back on July 16th of July 2018. Yeah, so did start dropping. I'm on the 4-hour chart, by the way. Yeah, and what I used for that view is same pattern as the yeah, I used this one, a bearish bat. So anyhow, just same one like the pound yen. So it did start dropping from there. Yeah, now for this exactly, I would be looking exactly like I explained on the pound yen. This is would be valid for the euro yen. And yeah, there is one pair which I'm interested in. It's not here, and I want to go over it. The USD CAD, which is most likely the star of the day, right? What I'm curious to see what has it done. Yeah, because it's exactly where it's about to make a crucial decision, and one way or another, a pattern is you're welcome, Shaheen. One way or another is it could end a pattern, even if it goes up right here and bumps its head in the upper rising channel trend line, or this is indeed a leading diagonal for this wave one minute red, and it's if it breaks out, then it could become very bearish. Yeah, and let's say as an example, let's say for instance on the USD CAD, let's say back on the April 23rd, I was mentioning the possibility for after a breakout right here, I was mentioning a possibility for a rise from 1.3380 up until 1.38 at the 100% right there, and then you see with this view 1.38 and then straight down. And what do you know? Rise from there, a reaction exactly at the 100 Fibonacci extensions, and then the solid drop with this view. Yeah, and then of course following up with that breakout, with that breakout, and then basically to continue the actual drop. And then I was patient because this structure is became a little bit complex. And while I've seen this A, B, C, D structure on the harmonics, yeah, I said okay, I think it could be ready for another drop. And you can see I was focusing on 1.31 and 1.33 as the levels. Yeah, however, the structure seems to be becoming a little bit more complex. Yeah, so the way I'm labeling it is as a WXYXZ. I know it is, I don't know if I should label it in a triple free. Triple frees are very rare, but it could pass as an A, B, and then an ending diagonal right here. Yeah, the problem that I'm having is that descending diagonal is still going through this going in a channel, a rising channel. It's not contracting. So yeah, I mean, that's why I'm thinking that the labelings could be spot on, correct. So I could be right. Anyhow, the levels were reactions were done there, but that's exactly why 1.36 is next. And in my personal opinion, that would be the final one. Yeah, for could be the final one. Sorry, as I said, these are only my own views, and could be treated or should be treated only as simple market commentary. Yeah. Now let's move on to something that interests people. Yeah, the TRI, the Turkish lira, the USD TRI on the 2-hour chart. Yeah, we know. Yeah, we know what happened with the Turkish lira, and sustained extension, bullish extension, and it lost a lot of ground, the Turkish lira. Interestingly, the drop that followed, I'm not looking at this as as the entire correction. Yeah, I would see another swing, yeah, on the downside, but the way it rose, it's not impulsive anymore. You see, something has changed from this to this, and it's not even doesn't even look like a fifth leg on the upside. So it could be doing exactly what the US indices are doing. And I mean, the structures are complex, yeah, double freeze, or either an ABC or WXY. And how I'm labeling it is an WXY, sorry, ABC. And the drop, I'm labeling it like this. We have three legs on the downside right here, triangle inside right there. All we need is an impulse, and it seems to me like this is an impulse with an extension 3 4, and then the fifth, like how much this could go according to the Fibonacci extensions towards the 61.8, but also 61 point, sorry, 100% of W and X and 61.8 of A, yeah, which will mean the lower base of the trend line or the channel, rising channel. And yeah, levels in focus, what can I say? 6.4, 6.295. With 6.4 is actually right now. So the next level is would be 6.295. And we can actually, we will see what could happen there. Because if this breaches, then the pattern could change and more weakness could unfold after, you know, possibly until 5.6 before, I mean, until all that. With the Turkish lira is different because of the country's political matters, but still, so short-term wise, it's still bearish, yeah. US dollar, US TRI, I would say, personally speaking. Next, USD Mexican dollar, yeah. And I can go on and on these patterns, yeah. AB equals CD, yeah. Very nice pattern right here, okay. But also a simple flat correction, A, B, C, with an ending diagonal in the C leg, yeah. And now what followed was basically the drop at the 100% from A to B, yeah, AB equals CD, right? Fibonacci extensions from A to B determining 100% of C, yeah. By the way, during the course, the Elliott Wave ebook, I am actually, these things are quite I mean, explained a little bit. But just as a side announcement, there is a video course with more in-depth educational explanations, let's say, ideas, etc., on Elliott Wave. And during that, I will be providing you with in-depth and exclusive info and my secrets behind these rules on how to label correctly and how to use the Fibonacci extensions, etc., right? So the Mexican peso is looking like it could continue, right? Because have a look at this. It went on the upside, now contracted, and now it's doing a correction piece after a big drop. So what do you know? Well, what could be next? Well, a correction and then more downside, right? For this to complete, I mean, this pattern to be the corrective pattern bigger than for here. Yeah, so we'll basically see, right? But so far, these patterns, one way or another, the Elliott wave patterns, they do seem to line up. Back for the US dollar, on the dollar, I mean, on the back on the dollar index on the 2-hour chart, we do have a reaction right there. Yeah, so we just need to go on the lower time frames for that. Yeah, and yeah, by the looks of it, this could actually, I mean, let's say, as my focus for next week will be the following thing. I would be looking to see how this move unfolds. By the way this looks, this could be an impulse or an A. Yeah, either way, more continuation for the upside from experience. So we'll be comfortable with a 61.8 right there, yeah, because it's also 100% of this previous move. So these moves actually kind of line up. And let's say for instance, at the peak, I was actually I was looking at the dollar index with bearish eyes, yeah, and you can actually see it actually dropped right there. Okay, now these are some points of interest right here, vibrational levels placed on specifically on my Fibonacci measurements. Yeah, I'm labeling it as an impulse on the downside, corrective. Two, not I mean, the only question is if this wave 2 finished, finalized, or is it extending in time to be, or so is it finished here, or this is corrective and it's going to go one more time towards 96 to test 61.8 right there. But also, let's say, for instance, yeah, there's another way to it. So let's just use the Fibonacci extensions right here, and let me show you guys how to determine these things, yeah. And we let's say, for instance, let me just get rid of the other ones because we don't need them. 100% is slightly above these 61.8 and at the bottoms of that. So we could consider that as, let's say, for instance, we could consider this as an inverted head and shoulders for more upside, but also consider this as a head and shoulders for more downside, right, on the larger degree scale. So you see, some things they do line up. It's only a matter of time because the real before the real structure would actually reveal, yeah. By the looks of it, it could be returning for this type of swing until the 96, and then we'll see what happens. That's my 2 cents, personally speaking. Okay, nobody needs to follow me. Just let me just go through the charts again. Gold reversed from that, and it could make sense, to continue gaining support. I wouldn't like to jump the gun here, but personally, I would like to see a rise in the metals because yeah, I mean, crude oil dropped right here. Would be expecting a consolidation soon. It can drop more, no issues, right? Euro it's kind of struggling. So the view for the upside is not invalidated yet. Let's say intraday wise, only a move after beyond 1.154 would invalidate that view, but still has chances. I still have faith in the euro, and for the reason, basically on the fractal reason, which I've shown you before. Yeah. Now let's move towards more important stuff. Now with the trade war report. Yeah. By the way, my colleague here, Mr. Mohammed, he's explaining some important fundamentals right here, and then I'm backing all this up with my views on the on the technicals. And as you can see right here, the VIX rise was in view. Then the preparing for a possible drop in the dollar, which occurred as well, a rise in the euro, which occurred as well, for the downside on the yen, which occurred and still consolidating, and precious metals, the golden this is the monthly chart on the gold silver ratio, but still it rose, and then I mean it rose right here. Well, it will be interesting to see what happens at those levels, and more downside towards gold, yeah, and silver after that, and the rise basically. I mean the bounce off. Let me just go back. Yeah, that drop. It dropped more than I wanted it to go, but still 160. Yeah, I mean actually explain these levels. Silver as well, very volatile, the silver, and more I mean upside and then more downside for WTI, which occurred, and the US bull market explanation, VIX spike again, VIX, and the some views on the Dow Jones, S&P 500, and DAX, NASDAQ, yeah, which DAX basically, I know, let's say for instance right there at the top, it's a bearish view was shared. That's all I can say. So speaking of that, let's just complete this webinar with something special. Yeah, let's just have a multiple view on these. So let me just continue here where I left off with the DAX, and DAX is actually one of my favorite here, because let's say, for instance, March 12th 2017, when it was actually reaching 12,950, I said that there's a possibility for this to drop until 12,000 and then rise towards 13,400. Yeah, and then dropped, rise, yeah, and then dropped again. So yeah, Fibonacci, with the power of Fibonacci. That's all I can say. And then let's say right after that, when it was approaching the 12,000 levels, I said that it's a possibility for this to rise, and it did. Yeah, and I was also prepared with a bearish view on 13,300 and above. Yeah, and then after it actually dropped, right here, I said that there is a possibility for more rise, and a rise and then more weakness ahead. And what do you know, right? But what it's doing right now, it's breaking the trend line. So on the quarterly report for Orbex clients, I mentioned the possibility for this to complete one pattern and then to possibly start falling. And then again with the trade war report right there, boom, started dropping again, and posted again. And seems to me like I called all the tops and bottoms right here, right? So yeah, it was an adventure and a lot of work, but I'm still, let's say, for instance, let me just leave you guys with something, right? I do see this as an impulse, yeah, and 11,650, 11,500, possibly 11,350 would be watched closely for that. And similar to what I've mentioned on the Dow Jones, S&P 500 and all that, after they finalize this should synchronize, the fall to synchronize with the last drop on the indices and with the VIX spike, and then for the bull market to return, and this could go really, really high. Yeah, but there's something here ending, just like Dow Jones, S&P 500. Nasdaq, no, Nasdaq is in its is in a different thing. But anyway, still wave 3, so corrective wave 4 would be in play. Yeah. Now, moving on. So I went on each and every pair. The webinar is taking a bit longer. Yeah. So what I'm gonna do is we should end this session. So I believe that I explained to you guys a whole bunch of things. Yeah, I would appreciate your feedback. So while the link that you used for the registration there is a section for you to write your feedback. Otherwise, you would be able to provide that feedback later on the Urbex blog. So please do provide a feedback in regards to the webinar, and of course in regards to the info received, and should you need to expand your trading senses or wish to communicate, then please contact your account manager and let's set up an appointment or something. Yeah. I have a question here. If I do yes, I do. I do support it with yeah. Is there a certificate for the Elliott Waves books? Yes, there is a. This is a sequence. Let me just finalize this. Finalize this webinar with this. Uh, there are 4 parts in total. 3 of them will released gradually for people to learn gradually, and the 4th part is available only for live account holders. Now, in 2 weeks' time, there will be a revision webinar, such as this one, but focusing on the educational part for those readers who have questions for me to answer your question directly during this webinars, right? So we're going to have that revision session, revision webinar live, and also going on some fundamentals, technicals, just like we're doing now. Okay. And after that, a quick test, just for you. This is just for you. Will be done just for you to test your knowledge. After which, part 4 will be basically given out for those who actually passed the I mean, for those live account holders. Yeah. After the fourth part, a final quiz will be in play, in which the certificate, Orbex will give out a certificate for graduation for those who actually pass the test. Right? There are some questions there just for you to. This is basically for you guys to um, for Orbex to know that you're actually learning, yeah, from that. So anyhow, the point is that multiple things are coming, yeah. Not to mention that these type of webinars will be more frequent, at least from 2 to 2 weeks, if not every week, yeah. Of course, yeah, but I will keep you guys posted, but you can find me on the Orbex blog right there. You know, you can find some articles of mine. I'm doing videos as well. I'm posting the videos. Anyhow, there's multiple content coming, such as those frequent webinars, a video course, as I said, yeah, will be put in play and with much more in-depth explanation and examples on these things. So anyhow, it will contain. You guys are set for a lot of. Thank you, Musti. Thank you. Musti saying keep up with the idiot ways. Okay, thank you. Anyhow, yeah, that's about it for today. This webinar was a bit long, but so were the market movements, right? So back as a revision, let's say quick, I mean just fast, yeah. Dollar index. Let's say, for instance, this could be set. I mean, if it breaches the 61.8, yeah, after a correction like this, it could rise up until 96, and we'll see what happens right about there if it does have some sort of bearish reaction. Gold seems to me like it's possibly finalizing one structure right here. Could be set for a launch, or if not, yeah, if not, it could breach this and still continue. Has the right to do that, right? And touch this trend line once more before even thinking of rising from the 61.8, which is 1180, by the way. Yeah, silver level in focus would be 1395 and 1375, where this is labeled as the last drop in the fifth leg at the 100%, or 61.8 hasn't been touched yet. But one thing I know, 1395 and 1375 could be the levels in focus for silver, and this could mean business. Just like you know, the way it drops, it can also rise very fast. So yeah, think about it. Crude oil, a little bit more weakness than a corrective piece would be expected from my side. Euro USD, same thing as gold. Yeah, this could be a next wave, as I said, W right here, X ABC to continue and complete the 61.8 at or around 1.50, or even 1.145. So 1.150 would be in focus from my side on the euro. Now pound US dollar would be looking at the 1.2850 as the level in focus, and worst case scenario, but I'm not really inclining for that because of this move, impulsive move. Yeah, so I would treat this as an impulse. Yeah, but yeah, 1.2850. That's my level for it. I'm pleased with the USD yen because it's my view is already panning out. However, I would be comfortable with the 161.8, under which 112.20 would be my level in focus. USD Swiss could bounce from 0.9573. Yeah, but yeah, we'll actually see. But one thing I know is that if this is correct, then on the larger scale, this could finish right here, this corrective piece. So we have WX, and after X comes Y. So This could be the VIX spike if that occurs. Yeah, it's going to be interesting. It's going to be interesting because multiple patterns occur, because don't get me wrong, after this comes much lower on the AUD USD as well, you know, I mean, those are the views. So AUD bullish divergence ending diagonal with a triangle as the termination right here. NZD USD possibly more weakness, 0.6520, and AUD already hit the levels in focus, 0.7127. Yeah, anyway, 0.7140 already hit it, and we'll need some time, I would say. Yeah, it can go a little bit lower. CAC and DAX expected to retrace, commence retracement. I was mentioning that they started doing that already during the course, during the webinar. Euro GBP more downside ahead, labeled as an impulse, possibly free of freeze starting. Pound Swiss inverted to the Euro GBP, so it could actually start a bullish sequence soon. Next, pound yen, still consolidation, no major direction, but USD CAD could start a bearish impulse. Yeah, we'll see. Even if it rises towards 1.36. However, I don't really see that as a possibility. It reversed wave 2 right here, labeled as wave 2, reversed at 61.8. So I don't really believe in coincidences. I would actually stick with that bearish outcome. So we'll see. Yeah. Now that's about. Yes, you can have those educational sessions. That's not an issue. That's about it for today's session, guys. I hope you enjoyed it. I hope you enjoyed this webinar brought to you by Orbex. Once again, this was Richard, and how I like to say to all my traders, until next time, stay in the green and many pips ahead. Thanks for watching.